Alright, so the YouTube stream should be up and running now as well. Let me actually plug in charging cable. So don't get confused now that I'm in a short on a different account. We'll see. I'm gonna set a stop at break even to, let's put it right here, and the other stop we're gonna put above this high. Just to make sure we're protected on that little scalping account. Want to see how bearish momentum is heading into that 8 a.m. hour, if we can, yeah, take out most of the sell side liquidity alongside this trend line. Let me pull up the YouTube chat on my second screen. There we go. This morning we took a initial loss on our trade day new funded account. We can see that was the setup that we took. Market structure shift, bearish fair value gap. We used half the risk because we already filled the volume imbalances and the bearish fair value gap prior to the London Open right here, or with the London Open, where we got our market structure shift confirmation. We consolidated, we played around for a while, but yeah, looking at price action right now, we simply continued further to the upside. Right now, here at the high, we got that SMT divergence with NQ. NQ didn't make a higher high here, and NQ's previous day's high is coming in right here at 15,228, which could be a potential target. So this could be a retracement into some internal sell side before we take out the previous week's high, basically. Let me copy the ICT all-in-one indicator with the correct settings over to NQ. There we go. Previous day, previous week's high at the high. Right now also at the VWAP. We're also bouncing at the VWAP right here on ES. So we want to see if we can continue. If we do not, we are not too worried, because we're simply going to take a stop out at break even. So it's either make or break here. We're either going to hold support around the VWAP and continue to deliver into the high of the day and maybe the previous day, previous week's high, or we continue lower from here to target, some more of this sell side liquidity. If we measure the entire daily range from low to high, 50% comes in where we're at right now. We have sell side liquidity below the 50%, or these lows along the trend line, and also these relative equal lows here during the Asia kill zone. Just gonna watch and see. Other than that, this is not a valid 2022 model for me. Therefore, we would have had to run up above the high that we have formed before the 8 a.m. open, and then get the displacement pullback continuation lower. This happened before. That's why I'm only in on my little scalping account. We fell short here on taking out the previous day's high. If NQ would have already done that, I would hold with much more confidence into all the sell side. We have these relative equal lows right here, but that's below the VWAP. Like I said, we want to see that break below the VWAP. Otherwise, we're just going to take a stop out at break even on this little scalping account. Let me open up the Discord. Good morning, guys. Good morning, Agent Smith. Good day. Oh, it's already 8 p.m. Yeah, fair enough. So this is just the Apex 100k static account. I grabbed a new one of those for a little bit of scalping. There's no 2022 model right now for me to take on the trade day account. Therefore, we would like to see a bounce, maybe somewhere from the VWAP above the high of the day with a displacement, fair value gap, continuation lower into these equal lows. So that's something I'm looking for, or exactly the opposite from the low of the day below the Asia sell side. So I want to see that liquidity being taken, putting in the reversal setup to continue towards the previous day's high. Right now I'm just in a little session scalp, the way we used to with tape reading. We have this trend line, we have all the trend line liquidity below here. I would anticipate that or prefer that to be run rather quickly instead of bouncing and bouncing off the VWAP. We will keep an eye on that. We have bearish SMT divergence with NQ. NQ almost hit Friday's high and also the previous week's high right here, but it fell short. And then this push at 6:50 a.m. New York local time, right here, 6:40, 6:50. We didn't get above the buy side liquidity that has been formed at 5:10. If we take a look at that, 5:10 buy side liquidity, we didn't get the push above on NQ like we did on ES. We actually left behind a lower high. So we have bearish SMT divergence paired with a structure shift, a pullback into the trend line area, followed by the continuation lower. That's why I am in a little scalp right now. We want to see, we already closed below the VWAP. We have the midnight level right here. We do not have news on the calendar today, so let's see if we want to take out at least these two relative equal lows. Or maybe take out Asia first and then take out the previous day's high, Friday's high. We will see. For now, ES is holding along the VWAP. Up $50, but nothing significant. You can only enter with 2 mini contracts on these static accounts. Your drawdown is fixed with a $625 loss from your overall account balance. So once you're in profit, that's not trailing with you. But it's only an issue if you do little scalps like this. That's why I specifically got the static account for these scalps. Why am I only in with 1 contract? I thought I'm in with 2. I think I might have already hit a partial. Yeah. Just based on the overall market conditions right now, like the slow and steady uptrend during London, the trend line break paired with the market structure shift, outside my kill zone where I would take trades during for the trade day challenge that we are documenting live here. Right now it's just on my scalping account. Sell side below all these lows here along the trend line. Can watch the 1 minute time frame as well. No inefficiencies here. We tap those inefficiencies and continue to go lower. Nothing too interesting here on the 1 minute time frame. Gonna set my stop to break even here. Don't want to get involved in a VWAP bounce for the continuation back up to the high of the day. NQ is also playing with the VWAP. Yeah, but other than that, my take profit target is going to be these equal lows here for this little scalp. Let's see what we get. If we look at a 15-minute time frame, we got our market structure shift. We form a lower low, higher low, higher high, lower low. We leave behind a nice 15-minute bearish fair value gap after the slow and steady uptrend right here. So yeah, I don't know, it's up to the trader. I considered taking it on the trade day account, but the streams are starting at 8 a.m. and therefore I would have liked to see this high to be taken before that. That's why I chose to take the trade on my Apex static account. I think that's pretty obvious. Trend line, high, lower high, pullback, higher high right here, high of the day. Nice bearish 15-minute fair value gap. The first fair value gap on the 15-minute we have left behind since before the London kill zone basically. right here at the daily open. That's where we're holding up right now, the Asia session high, this bullish share value gap. We kept holding support here nicely, tapped into it a couple of times before continuing up higher. So just following the overall trend, NQ is doing the same. That's nice. The DXY is going to the upside. We outlined the market structure shift on DXY earlier this morning, right here, where we took out sell side, shifted structure. We kept on holding this order block right here and delivered higher from there. If we take a look at our Euro US dollar chart, similar, yeah, we didn't go above the high where our stop loss would have been. We went above the bearish fair value gap entry that we outlined. We went above the optimum trade entry, even above the 80%. But still, if our stop loss would have been right here at that swing high where it should be, we almost delivered into these lows from the London session. And if we go back to the DXY, those are these 3 a.m. London open highs. That's really our first major target. We took out Friday's low here on EU, on the DXY, also on EU, and potentially look for a pullback higher. Discord message, let me make that. Get rid of that sound. Good morning, guys, on YouTube. This morning during the London session, we, which is only accessible to VIP members at this time, we took a short on a 5-minute time frame right once we swept this low, and we also closed below it, but with only half the normal risk that I'm going to use for this trade day funded account challenge. We're gonna try to, we're gonna take the 2022 model during both London and New York kill zones every day on live stream, on the stream, and see how we do. See what finds out what's happening after 66 consistent trading days. We took a short right after here from this bearish fair value gap, but unfortunately got stopped out right here at 3:40 a.m. New York local time, which actually brought in our first loss right here. This was the trade. We're keeping track of all that with the account number. First loss minus 150 bucks. So we will see what we get during the New York session. This is a different account, the short that I'm in right now. That's my Apex scalping account, where I mainly trade based on my overall gut feeling, I would say, and my analysis. So not just simply following a specific rule-based model where we want to see a high being taken, a displacement with a bearish fair value gap for the continuation lower. I've already uploaded the entire London live stream recording to the YouTube channel. Let me open that up. If you want to watch that, we talked about the last 2 weeks of price action on ES. Looking exactly, where is it? It's not there yet. Manage videos. Unlisted. Okay, that's maybe why public. So I've just published it. This one. Day 1 of 66, London kill zone. A little loss. Let's see. I'm really excited to see where we end up after 66 trading days on that trade day 50k account. Will we get it funded? Will we already request our first payout? According to historical data, I would suggest that within 66 days we should request our first payout, or should be able to. Right now, like I said, I'm logged into my Apex account. I mentioned the trend line. Hang on, here on Discord as well. Not sure if many people were able to catch it, but right here inside the tape reading chat, major trend line broken plus SMT divergence at the high. Before I took my entry, I waited for the retracement up higher. Already secured some partials on the move down as a little scalp. Right now I'm in with the remainder of the position, the second contract. So here we go. It's 8:25. Let's see what happens at the injection of liquidity at 8:30. 8:24, 8:25, 8:30. Yep. Our stop's already protected at break even. We do not have to worry about a intraday trailing drawdown with this static Apex account. So let's just see how that goes. Really the draw on liquidity for me right now. We have this low right here, which basically would be our London open low right here at 3:05 AM. We open up with a bearish volume imbalance, so that's nice. We have more sell side below here. This morning, before the London kill zone, we kept on holding support inside this bullish fair value gap, so we also want to take a look at that. And see if we don't want to continue to maybe even hit the midnight level, which is represented by the stashed line. NQ, NQ, NQ. Slowing down. ES is starting to be a little bit more aggressive here. Open up with the bearish volume imbalance. 8:25. We do not have news on the calendar today, so we'll see what we get today. If we look at a 15-minute time frame, we had a valid 2022 model. We took out buy side, paired with SMT divergence. We hit the bearish fair value gap here on the 15. We had this major trend line broken. So nice confluences overall, but unfortunately before the session where I consider taking trades on the trade day funded account. Head over to trading view, go back to the 5-minute time frame. So we took this sell side liquidity. London session low or London kill zone box low would come in right here. Let me actually go to the ICT All-in-One indicator and turn on the London kill zone box. Right here in this blue box represents the London kill zone. Let's get rid of the London session background. This represents Sunday. We could also get rid of that, but I like having that on there. Right now, this is the representation of our daily candle. Right now, we're right at the opening price. Open comes in at 4,379 and a quarter. So right now, we're just playing with the daily opening level right here. We have a new weak opening gap, but only a very small one. We took the sell side. Our stop is protected at break even. We have our target. I move it down to the low of the day. NQ didn't reach that sell side yet. Now we have equal lows inside this bullish fair value gap. We have the midnight level down here. Let's look at it on a 1-minute time frame. Bearish fair value gap. Ideally would like to see that being respected for the continuation lower. Are there any questions regarding this trade or any of the 2022 models or maybe the London kill zone? If so, feel free to ask me. Where's that thing now? There. Other than that, we're just gonna be sitting here patiently to wait for either a 2022 model to form, maybe once New York opens up at 9:30. Otherwise, yeah, we're just gonna stay and do some little scalps here on the 5-minute time frame, maybe the 1 minute after the New York Open, until we get a nice clean reversal setup at the extremes. The extremes for me are labeled as the high of the day and the low of the day. The Asia session low, we already cleared the London kill zone high right here. But yeah, I simply want to see the high of the day or the highest point before 8 AM being taken. We also have buy side liquidity just above here, which would be the previous day of Friday's high, which I would like to see taken, and then maybe get a 2022 model somewhere in this area to target the lows, or a 2022 model down here during our kill zone from 8 until 11 AM New York local time for the reversal back up into the high of the day. That's really all I'm looking for. And until we see that, it's patience time. 12 seconds to go on this 5-minute candle. I'm quickly going to the bathroom. I will be back shortly. Let's see, no new questions on YouTube, on Discord. Stop is protected at break even. We closed on this volume imbalance on a 1-minute time frame. We closed above our lowest bullish fair value gap right here, bearish. We already retested it with this candle. Yep, so stop loss at break even should work. We have equal lows, London kill zone box lows. We have this bullish fair value gap. We already tapped into it and it kept holding support once. So I would like to see for continuation lower, the close below this bullish fair value gap. If we check the 15, I think we also have a bullish fair value gap here. Yeah, this one. Close below that would help me, or give me more confidence in the continuation lower towards the equal lows during Asia. 1, 2, 3, 4, and maybe even the low of the day. All right, so I'm gonna be back very soon. Let's switch the chart. We're getting stopped out at break even by the looks of it. Okay. I'm happy with that. We made like $100 on that little movement to the downside. Yep. We'll see. Maybe we also survive. But that's the way I scalp. I move my stops to break even rather quickly, trying to get in with momentum to target opposite liquidity pools. We already hit major sell side. Right here, we bounced off the 15-minute bullish fair value gap, and we also hit the 5-minute down here, the lowest 5-minute before we reach the midnight and these equal lows. We'll see if price wants to continue. We don't really have any fair value gaps here to frame lower prices on this most recent price lag. So yeah, until then, it's 8:30. We're still inside the range between the high and low of the day. I'd like, for my challenge that I'm doing here on the live stream, I want to see a displacement once we are above the high or below the low of the day before I consider taking an entry. We got this early this morning during the London kill zone on Discord with our market structure shift right here, because if we disregard all the price action that we saw post this, we saw the structure break with our bearish fair value gap. That's my go sign. So yeah, we will see if we get a setup maybe after the New York Open, or maybe even before that. Okay, so we stopped out at break even. Open up with a bullish volume imbalance after taking sell side. Let's take a look at NQ. NQ is also bouncing off the VWAP, but yeah, less volatile. We still have the SMT divergence and these equal highs paired with our previous day's high on Friday. We cleared that buy side liquidity here on ES. High of the day, equal lows. Until then, there's really not much entertaining going on, unless I see a nice new entry opportunity. But for the little scalp account, close above the high, bullish fair value gap. Kind of a little reversal setup here after retracing into internal sell side liquidity. So this could actually be the retracement. We leave these London equal lows behind to move above the high of the day, get our reversal setup up here for the trade day account, and then we can take the reversal into this liquidity. But right now we can also see we're around the 50% measured from the high and low of the current daily candle. Not ideal trying to frame a long or short of it. You could most of the time do the same, flip a coin to see in which direction we're gonna go, around the 50%. The overall trend right now, since we broke this trend line and shifted structure here, is bearish. Let's look at the DXY. The DXY continues to go up, holding support on this highest fair value gap. Let's look at the 15-minute. Kept holding on the order block. We outlined this market structure shift on the 5 earlier this morning, which could really help the indices continue lower, but as usual, they're not always perfectly correlated. Sometimes we see the DXY go up and the indices go up. That only really helps if you trade for a currency cross pairs like Euro US dollar, Pound US dollar, Aussie dollar, and against the US dollar. Basically everything that's directly measured, has a nice inverted correlation to the DXY. Because according to the drop here on the DXY orders pump starting at 740, we should have seen a significant move lower, 740. And we kind of did, but relatively speaking, not that much. We're pushing up higher from our 1-minute market structure shift here to the upside. After taking out internal, just keeping an eye on that. Maybe we see a potential scalp setup. The drawn liquidity for NQ, I'd say, should still be the previous day's high, Friday's high, coming in at 15,228. Friday's high here relatively on ES would be coming in at 4,392. So after running up during Asia and London, we retrace towards the 50%. If we were to measure our entire range so far today, 50% comes in right here. We swept sell side liquidity below that to continue the initial or the overall move further to the upside. No, I think it's too early for 1 minute scalps right now. I'd say this high could be our next target here at 4,384. I want to see what we do once we get towards these levels. It's 8:35. Still 1 hour remaining until the New York Open, so that's a little bit of time that we have to get past. But the main focus right now is on the, let me go up here, is on the trade day account right here. We took a little loss like we spoke about earlier this morning. And yeah, I would be looking forward to take a new entry once we get a reversal setup around the extremes, and also took some external buy side, preferably the previous day's high, previous day's low. The previous day's high or Friday's high is more likely. But until then, I don't have to be locked into that account, and I go back to my Apex static challenge. Those 2 challenges are already done. Yeah, until then, there's really nothing better to do for us than wait. Unfortunately. Watch price action, do some little bits of tape reading, and yeah, see what price wants to do. Broke the trend line, take some internal sell side liquidity after doing so, and then continue into the initial trend direction, continuing the Asia and London kill zone trend further to the upside. NQ is also pushing again after taking out sell side liquidity, like we already spoke about. Friday's high would be my draw. Let's see if we could get in a scalp here on ES. We will see. Market structure wise, we formed a lower low, lower high, lower low. Well, on the 1 minute, we could frame this as a lower high. This wick makes it hard. No. 2.5 minutes for this 5-minute candle to close. Let's take a look at the 15. No bearish fair value gap down here on the 15. We're back inside our 15-minute 2022 model bearish fair value gap. We tapped into that already and filled it completely. Delivered at least, if you take the low-hanging fruit entry, almost 5 points. Depends on where you get in on the 15-minute. Unfortunately, the setup happened prior to the 8 a.m. kill zone, where I start trading. So until then, like I said, waiting time. Take a look at 1 minute. We immediately rebalance this bullish candle right here. We do not leave behind a new 5-minute fair value gap. We made sure of that on this 8:40 a.m. candle. We retraced to the high of that previous candle before this bullish momentum candle after the volume imbalance. We only have a fair value gap all the way down here, paired with the VWAP. We're above midnight, the 8:30 open. We can also show that on our chart. Comes in right here. We have the daily opening level right here. Yeah, right now I'd be looking forward to higher prices. At least taking out this high or this high. Here's the 8:30 open right here. Now 7:30. I actually have to modify that under default settings. So this one now has to come in at 9:31. It's off by 1 hour. The midnight open is correct. Yeah, midnight open is correct. Let's see where that 9:30 opening comes in, or 8:30 right here. Open up with a bearish volume imbalance here. 15-minute bearish volume imbalance as well. 1-minute time frame. It'd be too early to anticipate anything here for me. Even for a scalp, I would like us to either take out some buy side right here and then get some confirmation on the 1-minute time frame. But right now I'd say order flow is bullish. Could get rejected here with that 8:30 pump to the upside. But yeah, really I'd just be looking for higher prices here, really. Also on NQ, after taking the sell side, we already ran up quite a bit during London and Asia. Asia also put in a similar trend. Every time we went up, we had the retracement, but we still managed to continue up higher, bouncing off the VWAP here. Took out the current high of the day, retraced. Here we had bullish SMT with ES. We spotted that live during the London session live stream. And so now, before actually taking out the buy side liquidity bull above Friday's high, the previous week and previous day's high, we induce liquidity, or we create more liquidity, retrace to stop hunt some of the longs that jumped in along the way, trailing their stop with them. So we made sure majority of the shorts is off the table, and then quickly reverse also again from our VWAP area. That's why we moved our stop to break even once we hit that level. But for right now, don't see anything that's worth taking. And like said, for me to take a trade on the trade day challenge that we're keeping track of in these live streams, I want to see a reversal setup at the extremes. So if we get to the high of the day here on ES, I think NQ shouldn't really have a struggle getting above the previous day's high. For ES, that's a little bit more of a movement. From here, that's, yeah, okay. Only 5 points. Let's take a look at the London range from the low to the high. Also only 6.5 points. So to get scalps in here on this Monday without news, you have to be content with, yeah, even less than 5 points. Just quick scalps into liquidity pools. Did anyone, good morning, Fade TV. You signed up for the live stream access. Why do you watch on YouTube? you should be able to, with the live stream pass, join us here on Discord without delay and without ads. Short YM. I won't take a look at YM. I think we have enough charts open at this point in time. 8:45. Starting a new 15-minute cycle. Yeah, really not the cleanest movement even for scalps on the higher time frames. Trade day over here. Dashboard didn't update just yet. Still no access to Discord. Let me. Pretty sure you do. Livestream pass, you have the rights. Let me quickly check the settings here. Permissions. Try now. Now I think you should be able to. Yes, we took a trade during the live stream this morning on the first day, but unfortunately happened to turn out as a losing trade. We took a loss of 142. We only used half of the risk that I was intending to use, because right here at this point in time, we were at the high of the day. We got our displacement prior to the London Open, and I really wanted to see this 2:55 a.m. candle to close below our market structure shift level for me to confirm it. Then I would have entered with two mini contracts, one entry right here on this unfilled volume imbalance and one entry on this bearish fair value gap right here. It didn't happen, and we managed to close below this little swing point right here with a higher low to the left and a higher low to the right. So I decided to still enter, but with only half the risk. So only one contract, got in right here on the bearish fair value gap again. But unfortunately we didn't continue lower, and we just chopped around for an entire hour before we got stopped out. By YouTube. So yeah, so for the first day, London session, during the live stream, we took a little loss, but 66 days should cover us until the end of December. We will see what happens until then. The cool thing with Trade Day, that's a not new prop firm. It's been around for a little bit of time. You can get instant payouts. You don't have a intraday trailing drawdown. I made a video about all the future funding firms. That's all on my YouTube channel. If you go to my channel over here, that first video. Okay, home is showing the live streams right now. Here, best future funding firms out there. If you watch that video and towards the end. God damn, yeah. YouTube ads. You can get Trade Day 5% target, so it actually has the lowest profit target within, yeah, comparing Topstep, Apex, and Take Profit Trader, and a 4% drawdown. So the same drawdown as Take Profit Trader and Topstep. So actually it has a better ratio, or a easier ratio, between your profit target and your max drawdown, comparing everything except Apex during the evaluation phase. Apex has the lowest ratio of 1.2 because you have a 5% intraday trailing drawdown. That's also the difference with Topstep, TPT, and Trade Day during the challenge. you have a end of day calculated drawdown. So even, let's assume, I've got many questions about that recently. Let's say we're in a short from here. Let's find a good example. Let's say we went short on this bearish fair value gap, like we did with the scalping account, and we are, let's say, $500 in profit, by the way, down here. But because we walked away, or because we were greedy, waiting for the low of the day to be hit, we wanted to see more profit. So right now our account is $500 in unrealized profit, and we move our stop loss to break even. So this is what our entry would look like. We have our bearish fair value gap, our stop would be above here, and by the time we hit this target right there, we are $500 in profit. So with Apex, it's your drawdown, your intraday trading drawdown is being calculated live. So you've made $500 in profit. It's your fault, basically, saying that, yeah, you didn't secure it, and now you got stopped out at break even. So you actually have already lost $500 off your trailing threshold, while with all the other companies, that's being calculated at the end of the trading day. So even though you missed out on unrealized profits here, the drawdown is always being calculated at the end of the day. So let's say right now we're at $51,000 and we happen to lose 500 at the end of the day. Now we're to 50,500. We deduct 4% from that, and that's our current trading drawdown. It's moving up with price until we get the challenge passed, but calculated at the end of the day, while you can fail the Apex challenge intraday by not realizing your profits. And then if we take a look at the funded account comparison here in this video, we can see that trade day has a 4% max drawdown and calculated at the end of day. Only Topstep also calculates at the end of the day, which is a good benefit to have. But of course they all lock. They use the safety pillow method, that's what I call it. So once you're on your funded 50k account or 100k account, you have to get above a certain threshold, which always is your max drawdown from your starting balance. So once you made 4% profit on trade day or take profit trader, your drawdown locks in at 50k, and then it becomes static. So let's say you, for example, at 60k on your funded account and you don't want to take a withdrawal, you could potentially lose, the 8%, and you would still keep your account because it locks in at 50k at your initial starting balance once you're above a 4% profit target. I hope that makes sense. It's confusing a lot of people, but just try drawing it out on a piece of paper and it should make sense. So until you're above that threshold, 4% in profit, which is $2,000 on a 50k account, your drawdown is being trailed with you with TPT on your funded account intraday. So it's making a switch from end of day calculation over to intraday, which really sucks, but I don't know, I still like Take Profit Trader because you can get daily payouts without any issues. Daily payouts, you can use up to 6 minis, and most important, you don't have a consistency rule for the payouts. So with Apex, if you want to, let's say, pay out once you're at 55k, you have to make sure that your biggest trading day didn't make more than 30% of your entire requested payout amount. You don't have that with all the other firms, so that's pretty cool. Let's say you have a very good trading day where you made 60% of your total payout amount that you want to pay out. It doesn't matter for any of the other funded, future funded account prop firms. Once you're funded, it only matters on Apex. So if you have a, I don't know, $2,000 profit day, you have to make sure that, if you request a payout and you want, I don't know, you want to pay out these $2,000 on your Apex funded account, you can't, because, those $2,000 consisted of only one trade, and all your other trades were, let's say, $200 trades. And $200 is not 30% from 2000. And yeah, that's really why, I don't know, once you're funded with Apex, kind of sucks, but it all depends on your trading style and your approach. If you simply follow your rules and you risk a specific amount of money to make a 2-to-1 risk to reward, then the consistency rule really doesn't matter too much, because on your biggest, most profitable trading days are always going to be roughly around the same amount if you target a 2-to-1 risk to reward. So, for example, the way I'm approaching the trade day challenge, my most profitable day could be $1,000 if I win a 2022 model during both London and New York. Yeah, we will see how that goes. So far, I'm pretty happy with trade day. The setup was really quick. And it's a little bit more expensive, but you also have to keep in mind that you do not have to pay a activation fee. So with Apex, they have their 90% discounts for the challenge, but once you get funded, like I did right here on these two accounts, I reached the profit target. I just have to trade with micros to make sure I get all the minimum trading days in. You actually have to pay a activation fee that's gonna change with different account sizes in order to advance to your funded account. And if you really do the math here, where do we have that? And disregard all the discounts that each and every single prop firm has going on, you actually end up paying the least amount of money with trade day because you do not have that $150 activation fee that you have with Apex or Topstep. And also not with TPT, or at least until the, let me take a look, Take Profit Trader. Until the 7th of November, you get the 40% off for life discount and 100% of your profits. Yeah, and you also don't have to pay the pro fee. That's pretty cool. A very nice offer, because usually with the pro account fee, you spend $300 overall on your Take Profit Trader account. So if you're pretty confident in what you do and you are consistent, trade day is the cheapest option. Maybe not initially. It might look like, okay, Apex is only charging $15 for the fund or for the challenge, but in the end of the day, once you get funded, you have to pay the $150 or $140 activation fee, which is making it, yeah, depending on the discount you've used. Currently, I have a 20% promotion code with trade day. More expensive than, yeah, going for the initially more expensive challenge. But let's get back to our charts. ES consolidated here for a little. Now we get the new hourly candle. That's likely what we've waited for. So we got that displacement move to the upside at 8:35 with the new 15-minute cycle or 30-minute cycle. And from here on, we consolidated, waiting for new hour momentum, which is coming in right here at 9 a.m. with that new hourly candle to maybe, yeah, continue to push back towards the trend line where we swept some sell side liquidity. We just took out these two relative equal highs. Next buy side would be right above this level right here at 4385.25. And then, yeah, the move towards the high of the day. And on NQ, that would also mean that we're likely going to take Friday's high. No fair value gaps here on the 5-minute. If we take a look at the 15 on NQ, we took it out. No inversion fair value gap. No fair value gaps at all since 2:15 here on the 15. If we look at the 1-minute time frame, we took out the equal lows. We had our displacement. We retraced into a bullish fair value gap, and from here on continued back to the upside. I like these setups, but I would like more. I'd like to take those once we take out external sell side, like an actual session low. Here we had the London session low and the London session high. Up here we got the reversal post London kill zone, a tiny one. Failed to make a higher high. Had our market structure shift paired with a bearish fair value gap and continued lower from here after failing a couple of times. during the London kill zone. So yeah, we get that strong push on NQ and also on ES. Now we have equal highs coming in at 4385.25. Shouldn't take us too long to get back above the high of the day with that new hourly momentum. The DXY is retracing now. Bongo Rambo, it's not a real money account. You're only trading virtually simulated capital. You have the option to choose a live funded account with trade day if you want to do so, but I mean there's no benefit for the trader to, you can either trade a funded simulation account and then all you do is, you're basically a contractor analyst and you trade a demo account, and if you manage to get profit, you get a little paycheck from the company you work for. So no, there are no tax issues for me living in Germany. Only if I would be trading, live money from a company overseas. We just took that buy side. We now hit that 5-minute bearish. Note that we also closed above right here. Which account are we locked in? 37. Take a look at the 1-minute time frame. It's all demo account trading. That's the main point. Here also with a strong 5-minute close. Let's jump in here with price on the scalping account. See if we can chase the new hour momentum just into the high of the day. If we continue lower, I'd add some positions. I really want to see continuation towards that high of the day, since we've shifted structure now, very obviously. Maybe a retracement into this little order block, or maybe we leave behind a 5-minute bullish fair value gap. I would also add on that. But for the trade day account, there's no 2022 model from the external ranges, being the high or low of the current daily candle. So no executions for the trade day account. So Bongo Rambo, the company is not giving you 50k of their assets to trade. I mean, 90% of the traders, maybe even more, fail these challenges. It wouldn't make sense for them to lose 2.5k or 2k on every single person. They also don't copy your trades for that exact reason. If any funding firm ever claims that even during the challenge phase they copy your trades on a real money account, I mean, just ask yourself the question if that would be your company, and 90% of those traders who sign up with your company fail the challenge. Would you copy the trades of these people? And how do you know which one you should copy and which one you shouldn't? I mean, it's pretty hard to tell, because I don't know, unless they tell you, oh, hey, I'm a profitable trader, please copy my trades on your real money account. So I really hope you already start to notice that this doesn't make a lot of sense. If they claim that they copy your trades because blah, blah, blah. The only thing they do is to, at least with CFD prop firms, put you on a B book, increase the spread and increase the slippage, and making you lose more quickly. So they get $500 for your funded account challenge that you have paid. Maybe once you're funded and you have a proven track record, and then they see that in their, like, I don't know, dashboard of all the funded traders right now, and they see there are 2 or 3 people that are really making consistent trades, being profitable, they requested payouts for the last consecutive 2 or 3 months, then it would make sense to copy these traders, because then you don't have to pay the profits out of your own pocket. You simply hook them up with your live account, then pay them from the profits. But before that stage, it really does make sense, because most traders still fail the odds are really against it, and it would be silly to do that. Because then, yeah, traders spend $500 on a challenge. Let's say they have a 250k challenge, but now they lost 20k, and now as a company you would be sitting there that, yeah, losing 20k from a initial product purchase of $500. I want to see that margin survive. With trade day, you have the option to choose a funded live account. So if we head over here to trade day into the FAQs, funded, let's look for a keyword. Yep, funded sim versus funded live account. Funded sim, funded live. At trade day, when you successfully pass the evaluation, you're giving the choice to go into either a funded sim account, simulation account, demo account, or a funded live account. If you choose the funded simulation account, you can earn up to $5,000 in profits before we move your balance to a funded live account. We can take payouts at any time, so yeah, just request payout before you reach $5,000 in profits, and just tell them you don't want to move on to a funded live account, or make sure you've moved your residency before that if you get issues with your tax authority. But it makes sense for them once you actually hit your 5% and you show them you're consistent and you're profitable to move you on a live account. Otherwise, yeah, all the profits that you make have to be paid from their pockets, from the money that they have made, with other traders failing basically. I'm using the trade day funded account, right? This one here. Where's the account number? Doesn't show me on this dashboard, but I will keep it consistent. I only have one account with trade day. I keep every trade journaled inside Bento Book, and we see how it goes within the next 66 days. Maybe we already request a payout. Maybe we already on a funded sim account. So we took that buy side. We rejected off that fair value gap. Let's see if we cannot. NQ also took that buy side. If we continue with that momentum to the upside and maybe add another contract on this little scalping account on a deeper retracement into this fair value gap. The time is 9:10. Took buy side. That should be a good retracement. Let's just see how that goes. My stop loss would go below these two lows. I have my first take profit target, the second take profit target here. Just a little scalp. It's not the 2022 model, and it's not on the trade day account. This is just a $15 Apex 100k static account that I use for my scalps to, I don't know, avoid being bored, basically. Just watching the charts. So far, we already made a little profit on this move to the downside. Let's see if we can also make some profit on the move back to the upside. We hit the 50% of the entire daily range, and we reverted from here, paired with the VWAP. The new hourly momentum took out buy side liquidity. Didn't manage to get back above the high of the day. That's just based on a, let's say, well-educated, good gut feeling guess. Could be completely wrong, so please don't copy any of these scalping trades that I take. I wouldn't take them on my funded accounts either. That's why I'm specifically using that 100k static challenge here for $15 with Apex. See how it goes. But yeah, once I see the setup at the extremes, so preferably below the low of the day, we get a 930 move to the downside, a little displacement, market structure shift and all that. Then I would quickly log into my funded accounts and the trade day account and take the setup there. NQ. Time is 9:10, so we have 17 minutes until the New York Open. Can expect some more volatility now. 1 minute time frame. I think my stops should be fine below here. Hold support on any of these inefficiencies that we created with the new hourly candle. So 9 a.m. got that stronger push to the upside after driving into the lows 3 times. So once, twice, 3 times. New hourly momentum candle. Boom. Move to the upside. I hope that makes sense. 5-minute time frame. Let's watch that and see if the bullish fair value gap is being respected. If I don't see it being respected and we close below this box, I'm gonna take off one contract here, let the other one ride to manage my risk a little bit actively. In bullish order flow, I want to see bullish fair value gaps actually being respected before. Okay, so we close below. We close right at the low, but we open with a bearish volume imbalance. So once we get to this level again, I'm going to get rid of one contract. Otherwise, I'm going to take a little bit more of a loss sell limit. We're long, so a sell limit should get us out. Let's open up Discord here and see if we have any questions. Yes, I'm using the all-in-one indicator right here. That's what's drawing the Sunday box, the kill zone box, the midnight level, the 8:30 opening level, the daily dividers, all that stuff here, all inside of this one single indicator. You can also show volume imbalances and fair value gaps, but I still prefer to draw them manually. Previous day's high, previous week's high. Let's see, do we get our partial? Yep, so we stopped out on one contract short here. Now we're only left with our fair value gap entry. I will keep holding that until we go below this low. Give it some room to breathe. Preferably, we'd like to see this volume imbalance to be closed in with a new close back above the bullish fair value gap, but we'll see. Any serious trades will come once we take out the London session high right here. We had this SMT divergence with ES already on NQ, which really helped the shorts that we took starting here with the pullback. Once we broke the trend line, got in short on this bearish value gap, secured one contract at the VWAP, the other one got stopped out at break even. And yeah, now we try to catch a reversal back towards the high of the day with the SMT divergence within Q. This failure to take out Friday's high and the previous week's high, for me, I would look at it as inducement of liquidity. So instead of hitting most of the traders take profit targets up here, if they try to get in long, maybe somewhere around this area, what they did was, those traders tried their stop loss with them, but instead of hitting the take profit target already, they retraced, took out some sell side, took out some of these stops from London session long traders, because that's already all we really did, starting from the New York midnight open right here. Move to the upside. So before we actually take out the major liquidity pool, we create some more liquidity just below it, retrace to take out some stops, and then eventually with the New York Open deliver back into that liquidity pool. Now stopping out more traders, also stopping out shorts that got in short on this price lag and that are still hoping that we might continue lower from around this area. I personally wouldn't, but yeah. That's the game plan for the New York session. So I want to see liquidity to be taken. This would be the liquidity pool here on ES coming in at 4,390. We have some more daily stuff above here, especially at the 4,400 level. Daily buy side, daily volume imbalance, 4-hour buy side liquidity just above our previous day's high, Friday's high. Let's see how that goes. And let's see how this candle is closing in 50 seconds. Our inversion fair value gap. Why do I extend this one out to the future and, for example, not... Well, okay, there aren't that many fair value gaps. It's because we use this bearish fair value gap with the trend line to deliver towards the VWAP and to take out some London sell side liquidity to run some stops. And yeah, now we closed above it. So initially we used it as resistance. We got back into this area and rejected from here until we got that new hourly momentum. Closed above it strongly. Now we have a bullish fair value gap paired with that old resistance area, which I would now like to see being used as support. Another bearish opening right here. If I see this area fail completely, especially prior to the New York Open, I'm just going to get out of this little scalp. Just so we have something to watch and monitor before we potentially take a trade on a trade day challenge. The DXY is consolidating right here after the market structure shift earlier this morning. Kept respecting the order block. It really is 3 AM high would be the first target after consolidating just below it. Paired with the Asia buy side. Market structure shift, order block kept holding support. So for the euro dollar, that should be bearish, and we should see these equal lows, these two equal lows, and the Asia session low. That's also paired with equal lows to be taken. Measuring our initial displacement, we ran towards the high of the day, took out Friday's high, same as we did on the DXY. We made a higher high right here. One last manipulation. This place, we also closed below the market structure shift level here. Got filled on the fair value gap right here with our stop loss being little bits above this high. And we see that this high actually turned out to be a protected high. And we wouldn't have been stopped out right here until we finally broke down. So yeah. But we could also argue that we could see price move above this area, because that's likely where many of the short stops are. Everyone that went short stops right above these also relative equal highs. And right now we're around to 50% of this entire range. We had the 0.5 standard deviation. Get some partials in. Yeah, we will see. I will keep a look on the DXY. If the DXY moves up higher to take out buy side, we will see the opposite on the euro-US dollar pair. 99% of the time. But using it to, especially on a lower time frame, to anticipate what the indices are doing, that's not working most of the time, because they're not perfectly correlated, like for example the DXY and the euro dollar would be. So yeah, just looking at the higher time frames really for the DXY. Let's say we go back to our daily time frame where we've done most of our analysis. You can see that on the daily we have a unfilled volume imbalance up here, new day opening gap. We're inside a daily bullish fair value gap. The next sell side liquidity would come in here. So if we see stronger momentum to the downside on the higher time frames, weaker US dollar means stocks will likely continue to go up, and therefore also our indices. That's inevitable. But on the lower time frames, looking for specific things to get an idea of what the indices are doing, it's not really helpful. Sometimes we see the DXY on a 5-minute time frame going to the upside, and also the S&P or NQ going to the upside at the same time. Doesn't really make sense if they're perfectly inverse correlated. That only works on foreign currency pairs against the US dollar. NQ. 6 minutes until the New York Open, so let's get ready for some action. And see if we can get a entry on our trade day account. Make back the loss, and if we do not, then yeah, we simply wait for tomorrow. Let's see if we get the close below all these areas, and I would simply cancel this trade. Especially below the inversion. Okay, we close below and open with a bullish volume imbalance. Static trailing drawdown. Static drawdown, not trailing. Should be fine. I leave my stop below this low. Let's see if we get the bullish expansion move to the upside. Just a gut feeling from me right now. 5 minutes until the New York Open, we will see. I won't be in financial ruin if I blow this $15 Apex account. This is just for, yeah, I don't know, I call it entertainment purposes during the live stream while we wait for, yeah, our proper setups to appear from the extremes being the high and low of the day before London and New York opens up at 9:30. Let's take a look at liquidity. We have equal London lows. Right here, we have more equal Asia lows, 1, 2, 3, 4 down here. Right now, relatively speaking, we're above the 50% on the daily candle, so at the high of the day, preferably for my setup, I'd like to see the high of the day to be taken to form a new high after 8 AM, paired with the market structure shift displacement, fair value gap entry for a nice 2-to-1 risk reward trade into the sell side liquidity. Or exactly the opposite, if we take out all the sell side first, all these equal lows, and we get our displacement like this, and our fair value gap entry or breaker block entry with the reversal for a 2-to-1 back into the high of the day, or maybe even the previous day's high, previous week's high. Looking at what we've done so far, during Asia we had a little trend to the upside. Then Monday really started according to New York time, and we saw the trend continuation during London really. Even though we chopped around, we had a nice little trend line that has been respected beautifully until we broke it and used it as resistance to deliver where? Sell side below the 50% of our daily range. If we look at this entire daily range, what level did we bounce from? The 61.8, and sell side liquidity below the 50%. So we took out these lows, left equal lows behind, retraced into a discount to continue its move into a premium. The way I refer to sometimes is price needs to pick up some gas before it can continue its journey to the destination, which would be back into buy side. So for me to go short, I want to see at least the high of the day to be taken. Ideally also the previous day's high, and maybe some of this daily buy side or higher time frame buy side liquidity. We do not always get that. This could already be our market structure shift and our protected high, and we deliver lower to take this liquidity. This just means I'm not going to participate. If we look on a 15-minute time frame and we look at what we saw last Friday, we made a higher high and we displaced lower. So now we basically already retraced into a optimum trade entry 62. So we hit the golden pocket area perfectly with the current high of the day, which could be enough of a retracement into this range, into this displacement, to continue lower. 62.8 optimum trade entry, measuring from the new low of the day and measuring from here. Yeah, we should have hit that optimum trade entry if I turn that on. ICT fib retracement. Yeah, perfect rejection from the optimum trade entry actually. So we continue lower ahead of the New York Open, or did it already open? Nope. Didn't open just yet. Let's see if we get stopped out here. So be it. 20 seconds to go. NQ, let's look at NQ before the open. Also retracing a little bit further. The DXY is slightly pushing. Now we have our charts ready. 8 seconds to go. Ah, nice, we got rejected from the VWAP. Almost thought I entered into a... what happened there? Yeah, it doesn't matter. Bounce off the VWAP, left behind equal lows, and we get that anticipated push into buy side. Let me log out of my scalping account here. That's done for the day. That was silly. But let's log into our trade day account. And there we go, just like we anticipated. Continuation move. We got some volatility, unfortunately stopped out and added a short position. Not sure what really happened here, but I don't know. Would have been nice to be in that long. Easy to anticipate. Let's see if we can take out the previous day's high. And there goes NQ, already having cleared that. Be nice profit for the static account, but well, so be it. Now we wait for the 5-minute structure to form with our displacement for the reversal lower, if we get that. Otherwise, we just continue to expand further to the upside into some of the targets we spoke about in the weekly outlook. Da-da-da. 1 minute time frame. Nice 1 minute bullish candle here. Could this have been predicted? Kind of. Basically what we did. Just unfortunate with the stop out right here and the short position being opened. Must have had 2 sell limit orders down here. Well, entertainment purpose. We took that high. We hit a 4-hour inefficiency right up here. We are still short of the previous day's high. NQ already cleared that level and is now inside a daily volume imbalance up here at the current high of the day. We have a daily major trend line coming in as well. We spoke about that in the outlook. So what we want to see here really is structure being put in place, a short-term low, a higher high, maybe taking out the previous day's high, displacement, continuation lower. Or we simply ignore this entire move to the upside, get our displacement here, and then enter short on a bearish fair value gap. But until then, to make sure we're not doing anything silly, we're logging out of our TD account. Even if we look at 1 minute market structure here, we can't really call a market structure shift up here. Therefore, you would have to go to the seconds time frame, and we're not going to do that here. 5-minute time frame, candle didn't even close yet. One minute time frame. So let's see if this 1 minute fair value gap holds support to deliver into the previous weekday high. Friday's high, basically. That's what we would expect. We have our 5-minute inversion fair value gap here. But let's let it form, not drive ourselves crazy here. But nice rejection from that overall bearish area. NQ doing that same thing. Hit the daily volume imbalance. Removed the SMT divergence between ES and NQ. So we cleared the high of the day here too. Watching it on a 1 minute time frame, this really looks like a manipulation pump and dump unless we hold inside this huge bullish fair value gap here with the 9:30 opening. Let's see. So now we have cleared most buy side, at least on NQ. On ES, we still have the previous day's high liquidity pool above. Let's see, 10 seconds to go on this 5-minute candle. It seems like we're holding some sort of support, but patience is the key. Market structure shift for me would happen if we close below this level with a nice displacement, so a nice bearish candle now, paired with a fair value gap to target these equal lows. Even though the stop loss would really suck here, it would be super big. So 5-minute time frame is almost not really feasible to get that short entry unless you do a turtle soup sort of entry, pump and dump. Displacement comes in right here once we clear these equal lows. Want a nice bearish fair value gap paired with that. Let's assume we get some sort of a bearish fair value gap like right here. Our stop loss and our take profit target towards the Asia session low. That's not even a 1-to-1 risk reward, depending on where we get our entry. So we will see. First of all, I'm going to the bathroom. Let's see if we have any questions here on Discord. These big pumps and dumps, they just, mess up our risk reward ratio. Not anymore. Oh man, we have 11 people watching on Discord. That's awesome. Hey guys. $15 minute. Yeah, 15 minute. Nothing high probability. We just took that buy side like we expected with the New York Open. NQ is holding support here. But yeah. No, right now it's better to sit on your hands. I will be back in no time. A minute. Okay, I'm back. Taking a look at NQ. already forming a higher high, holding support after filling in this entire 930 inefficiency, creating the structure. So we likely see ES also continuing further to the upside, pushing towards that previous week's high. Just a matter of time. We've already filled the entire bullish fair value gap. Maybe we're also left behind with SMT divergence. The DXY failed to take out the London high and is retracing a little bit. NQ is running up very strongly here, almost at this trend line. So that's the trend line I've been talking about on our weekly outlook with the VIP members. Let me hide the ICT all-in-one indicator. We had 1-2 touches, depending on how you draw your trend lines, even a little bit more touches than that, just the same way as we did here on ES. 1-2-3 touches. The only ES we actually got 3. And relatively speaking, we're already at these areas compared to NQ. Trend line's a little bit lower, but the bullish momentum seems to be continuing. Bounce off the 50% above the daily volume imbalance, 5-minute time frame. And ES is not following suit here. So we right now have bearish SMT divergence. Let's see how that plays out. But so far we're in no rush. Market just opened up. We still have 1 hour and 15 minutes left for our potential setup for the trade day challenge. A reject of the bearish fair value gap here after filling it in, while NQ is now rejecting as well. But having made this higher high. So really for shorts, NQ would be preferred because it made the higher high. It's the stronger one according to SMT divergence. Took out buy side. Getting in on a short here. Once you see the setup, not just short right now. Might be a little bit better than here on ES. Go back to our 5-minute time frame. Still get a similar shitty setup with this huge wick to the upside. We would prefer, let's say we go back into like what we've got last week on the 5-minute time frame. We've spoke about this during hang on, let this load here quickly. 5-minute time frame. Friday, London kill zone right here. Got our displacement, bearish market structure shift after taking out the Asia high. Filled the fair value gap and hit our 2-to-1 risk reward during New York with the NFP news event. Really nothing you want to trade, even though we respected the breaker block. But still, I mean, yeah, at the high we didn't get a short, so that's all good. Not even here. Just want to make sure we're not missing anything. We're going lower. Let me take a look at NQ. So the prime example for the setups that I want to see would happen without any huge liquidation wicks, where we have a acceptable stop loss paired with a nice fair value gap. Like here, for example, during the New York session, if we would have seen a wick that looks something like this, like we saw today, and we enter on our fair value gap, then yeah, our risk to reward ratio would be impacted. Say it like that. And here we actually took out the previous day's high right here, getting our short setup. After extending into a premium, we retrace back into a discount, sell side below the 50%, and actually continue higher from our London 2022 model. We've covered all that during the London session stream. So if you want to check that out, it's on the YouTube channel. Should be processed in HD quality by now. Let me get rid of all of this stuff. High of the day has been taken. Let's see if we get a fair value gap here. I might enter with my stop a little bit above here. NQ is also retracing. I just saw a comment that RTY moved down against other indices up move. YM also had this pump to the upside and is now completely rejecting. Go back to NQ. 1 minute for this candle to close. This would be our market structure shift. And we apply to that, even though the risk reward might be a little bit skewed. We took out the high of the day. That's what we've been looking for. Now we want to see the close below the slow right here. Otherwise, it just ends up being a sweep. We already see a very strong rejection from our 8:30 opening level. 30 seconds to go on this 5-minute candle, still very volatile on a 15. Looks like shit. Nothing you want to trade. But we're on a 5. Wait for our setup. Likely not going to get it on this 5-minute candle. And then we still need to wait for the 5-minute fair value gap to form before we go short. So no rush. Step by step. We took buy side. Now we wait for the market structure shift. If we don't get it, and we simply continue up higher, so be it. We have SMT with NQ. Having made a higher high, now almost back at the most recent higher low. But continuing lower. We didn't close below the market structure shift level here on ES. We might do that on that next candle, but I don't think we will get a fair value gap here because of this big wick. The fair value gap could only form below this wick, so yeah. Don't think we're going to get a nice entry today for the trade day funded account. Therefore, price action is just too, in too small of a range. At least right now. If we get a setup, I'd still take it. But yeah, right now it's not looking really good. 1 minute time frame. Pump, reject, form a lower low. No bearish fair value gaps here to use on the 1 minute time frame, other than a potential breaker block for the continuation lower. Keep it simple and stick to the 5. Take a look at Discord. Now the model so this model you trade starts at 11 New York time. No, it ends at 11 New York time. It starts at 8 a.m. New York time. Yep, PA is not looking great, but it doesn't stop me. Sometimes PA looks shit and we still get the perfect model playing out. I don't judge by its look. I simply here to follow the rules. If we happen to get a fair value gap somewhere around this area after taking a buy side, I take that. Otherwise, this just ends up being a sweep. Sweep those equal lows and continue back up. We shall see. But like we said, we won't ever get a fair value gap here on the 5 minute because of this big wick. We would have to close below the low and then expand almost towards these Asia session equal lows to get a fair value gap entry somewhere around the opening of the daily candle, while we would really prefer our fair value gap be around the high. If we look at these old examples from last week, for example, our entry around the high is always preferred. We don't know how much we're gonna run or what's gonna happen in the future, but yeah, it just makes sense to get in relatively low instead of getting in somewhere up here or here for our risk to reward ratio. Okay, so we took these equal London lows. We're below the 830 opening level. NQ is about to take that as well. But like I said, the fair value gap here on the 5 will likely happen just around this area if we even get one. Otherwise, it's just watching time. We took buy side, we took sell side now. These two London equal lows, that's taken. We get our structure shift, but if we close below this low now, but the fair value gap will be missing. Could still react off the breaker block really, but I need the fair value gap paired with the breaker block in order to take an entry with trade day. For the funded accounts with Apex, I'm really not in a hurry to get into a position this Monday. Price action really doesn't look too great, and especially if I don't see that fair value gap, no reason for me to do anything on them. We close below the structure shift level, but again with a little rejection wick here, so next to impossible for us to leave behind a bearish fair value gap here, at least on the 5-minute time frame. On the 1 minute we might see a, yeah, also not really, except this bearish fair value gap once we took the buy side. But yeah, we could have done the same thing that we've done on NQ and simply make a higher high. So really taking a risky entry right here, being inside a bullish fair value gap wouldn't be worth it to me. Of course, now we saw it play out with hindsight, but at this point in time, watching NQ making that higher high, having the previous day's high buy side liquidity pool above us, doesn't make a lot of sense to me. A inversion fair value gap entry. Right here we have a bullish fair value gap. And initially we hold support until we close below. And now once we close below, we expect resistance. We could have gotten in right here with our sell limit order, targeting sell side liquidity below, and this would be a inversion fair value gap entry. Ideally, you take them in the same way as you take the 2022 model. Once we take external liquidity for a retracement back into internal. So we want to see high of the day, previous day's high, previous week's high being taken. Also preferably a smaller fair value gap. Let's say we had a inversion fair value gap looking like this. We get to close below. We retrace into our inversion fair value gap, and we have it paired with a bearish fair value gap. This would add probability to the trade because we now have a inversion overlapping with a bearish fair value gap for the continuation lower. But market structure at this point in time has not shifted to be bearish yet. You simply anticipate the pump and dump and enter based off the inversion, preferably with a bearish fair value gap paired with it to just stack confluences like we said. But we're gonna get better trading days this week. Like I said, no chance for a bearish fair value gap here to be formed. We have too many wicks covering all the bodies of the candles. Not here, not here. And if we get an entry below the midnight open or around the midnight open for a short, nah, wouldn't be ideal, I think. Measuring our standard deviations of our last manipulation move to the upside. Standard deviations ICT. 2.5 standard deviations would deliver us into some sell side liquidity that we have left behind on Friday. 3.5 would deliver us into this sell side, and 4 standard deviations would almost deliver us back to first day's high and the NFP liquidity void that we have left behind with this big news candle, this bullish one. if you like breaker block entries without fair value gaps, this would have been a breaker block entry. We close below, we reject from it, and we continue lower. I don't. It's not worth the risk. We have 66 days here, guys, to pass the challenge. Don't really have to pass it on day one. Also not very likely with the consistency rules, so let's just see how we go. I'm sure we're gonna get better setups than this one. Then we can just sit out. So the DXY is pushing up higher now, leaving behind these equal lows. Still, London buy side liquidity here at 3 AM would be the target. And this high right here. Yes, on the daily. What are we looking for our time frame? So this is the price action today on a 4-hour time frame. Really not ideal to trade, even on lower time frames, unless you take super tiny scalps on a daily time frame. Could have been anticipated after the second most bullish weekly candle on ES in the year 2023. Getting a retracement. Maybe. NQ took out the 930 lows, leaving behind a new bearish value gap. Looks like we're in bearish order flow here on NQ, but also on a 5-minute view. Market structure shift not confirmed yet. We have sell side below, and by the time we likely get the confirmation, we've already cleared most of the sell side liquidity. Right now, better to stay away. Took these equal lows during London, getting a push back up. Nope. Now would be the time to, I don't know, watch some YouTube videos or simply close your charts and watch a movie, or I don't know. Right now I'm watching the new Loki show. Right here from Marvel on Disney Plus. I really like that one. Season 2 is really cool. Oh yeah, like Freshly says, buy crypto. I made a video about Bitcoin with little bits of ICT. You found a gem. Oh, nice. With little bits of ICT analysis. Well, you gonna tease us here, or you are actually gonna drop the ticker? Only for VIP. Okay, then I guess I have to hide the screen here. Sorry, guys. Put it on my different screen. All right, we have a unknown ticker. Interesting. I'm gonna check that out and look at the PA after I'm done streaming on YouTube. So once again, we bump into the breaker block. But yeah, really, it's not the cleanest piece of price action. It could hold. Hindsight will tell us later on in a couple of hours if we're down here and we look for a reason how we could have taken a trade all the way down till here. Like, oh yeah, the breaker block, it was super obvious while sitting in it. This price action is just crappy. Not worth it to trade. We don't have our fair value gaps paired with it, so pass. Let it pass. Tomorrow is going to be a new trading day. The market's going to be open tomorrow again. No need to try to make $1 million today. That's interesting, Fresky. Everything that's aligned with the GMX ecosystem on Arbitrum, I assume, is big time. I'm also in Pendo Finance. They're doing some sort of aggregation with the I don't know, can't say it on the top of my head or from the top of my head, but yeah, everything with that ecosystem, and especially what you mentioned here can have a pretty significant market cap because GMX is one of the leading decentralized exchanges on crypto, where you can also take perpetual trades. Pretty cool. I've been in on GMX for, I don't know, pretty much since the release of the public mainnet Arbitrum chain. Been staking it ever since, so yeah, that's pretty cool. I'm always up for that. I will check that out after the stream. And unfortunately, thanks to many of the... No, I didn't get too many bad comments on the Bitcoin video. Let's see, let's check that out. Price action sucks. Go to the channel. Videos, 106 views. But we see not too many people are interested into that Bitcoin stuff. From my perspective, or from my experience with people being a long-term Bitcoin holder, since long-term, relatively speaking, for me it's long-term. For others it's short-term because they've been in crypto since 2012, like one of our members. Yeah, I don't know, you're either bullish on Bitcoin and you see the asset class continuing up higher, or you're super bearish and you pretty much every time price dips a little bit, you call Bitcoin to 0 or Bitcoin to 10K, or you simply don't understand it and the technology behind it, and people don't like things they don't understand and therefore don't like it and say, Bitcoin, I'm gonna buy it when it's back at 60K with all the FOMO. Kidding. But yeah, seasonal tendencies beside, if we see the continuation on the S&P 500 and Nasdaq out of this retracement, like we spoke in our weekly outlook, we had our expansion from Q4 into Q3 of 2023. We retraced the 50% level right here. And what did we do from here? Got a massive rejection to the upside. The second most bullish weekly candle this year, 2023, on ES, and the in terms of points, the biggest weekly candle here on NQ if we go to the daily time frame. And what did we do? Where did we bounce from? The 50% if we measure from low of Q4, high of Q3. We measure from low to high, 50% comes in right here. Vroom. NQ is also looking much stronger than ES does in terms of the higher time frames. If we, for example, look at the weekly, little bull flag pattern maybe for the continuation move to the upside, we will see. But if we see a rally towards the all-time high on stocks, it's pretty much inevitable for Bitcoin not to do so because money is flowing around. BlackRock and other many major players in the financial institutions are accumulating Bitcoin. They want you to think it's going to 0 because then they can buy more at a cheaper price. And yeah, which I thought is pretty cool, exactly 1 year ago. Okay, so we rechecked again from the VWAP, but unfortunately without the fair value gap, otherwise we would have been in the short after we shifted structure right here. If we would have had that fair value gap here for the continuation lower, we could search for one on the 1 minute time frame, but that's not really what I'm gonna do for the trade day challenge. If we don't see it on the 5, we leave it. We still have our breaker block right here. We spoke about 2 consecutive down closing candles. We almost repriced that entire breaker block for the continuation into the low of the day, and these Asia equal lows. Just gonna pass on today. Even if we get a bearish fair value gap here, there's just gonna be no setup unless we get a long setup between 10 right now and 11 a.m. So also a new hourly candle right here. If we check out the hourly time frame, yeah, ugly. 9:30, push into buy side, market structure shift. We we wait for a little bit for the new hourly candle to open, retrace into the breaker, and continue lower from that, paired with the VWAP. If you like breaker blocks entry, that would have been the entry. We spoke about that before just now. I don't know, like 10 minutes ago or something. But for all the long-time viewers, getting back to the Bitcoin topic, a little bit lower on my channel, it should be roughly 1 year ago, I uploaded a video called Bull Market Millions, Bull Run Millions. This is a strategy for the bull run with crypto, the one I did. Only 182 views, not too many people or viewers of my channel are interested in crypto stuff. But, well, not my fault. Pretty good analysis here, or let's say a pretty good approach on how you could have managed the bear market. You simply buy the dips. Like right here, I drew up my Fibonacci retracement tool and bought more Bitcoin and altcoins with every
let's continue with the strategy part. So instead of putting 100% at risk and getting into drawdown on your 10
here, 25% here, 25% on the FTX collapse.
Now you already
actually managing to get my lowest entry in.
Wouldn't be a smart way
cost
to do it.
averaging
Maybe
into the bear
for
market
example, fear that Bitcoin's
at
dropping to
15k,
zero and
which
all your
now is
money's gonna be
the
gone.
low
So you
maybe
don't want
of
to
the
put
cycle. We will
yourself
see.
into emotional risk.
If you're bearish on Bitcoin, you will strongly disagree with that statement. But, well, opinions can be different about certain things. Anyway, getting back to NQ and ES, enough crypto talk. I will check out that gem later. 5-minute time frame still playing around. No confirmed market structure shift. We don't have any news coming up today, so we will see if the trend just continues slower after our structure shift right here from our breaker block. This could have been a static account scalp, but I don't know. Don't really feel like forcing anything at the beginning of the week. Especially without the fair value gap here on the 5. On the 1-minute time frame, fair value gaps. I mean, we could have still played the inversion fair value gap that we talked about earlier. Bullish fair value gap, now acting as resistance, but well, it could be a cleaner setup. So now we have equal lows left behind right here. We're still playing around the opening of the daily candle right here. So we can see that's the current representation of the daily candle. We're not at the high or at the low. We didn't get an entry somewhere up here at the high unless you trade turtle soups, where you place a sell limit at the high of the day and yeah, pretty much hope it goes into the opposite direction. But even then, the range today has been pretty small. That's not even a 10-point move here. That just brings to show how small the range for this Monday really is. Only a 5-point range during London. We really thrive in these more volatile conditions where we move a lot and not these teeny tiny movements right here. Back at the breaker block. Take a look at NQ, take a look at the DXY. DXY now finally took the London buy side liquidity right here and rejected from it. If we take a look at EU, our London short should have played out. Did we? No, we didn't hit the London 3 AM lows yet. London open, we took out some sell side liquidity right here and then displaced, moved to the upside, taking out the previous day's high right here. Also, wasn't really far away from taking out Friday's high, but what do? They induce liquidity. They make it look like it's going to go short. Get enough short positions in just to quickly stop them out and make some more profits on with more stops. Stops for the shorts are likely somewhere around this area. Just place it up very quickly. Take out the previous day's high. Up here we got our displacement. We had our protected high that played out nicely. But yeah, Also pretty choppy today for a Monday without news. News calendar wise, we where do we have it? Monday. Let me check my calendar. Tomorrow we have... screw it, I'm just gonna open up Forex Factory, really. Tap the breaker block one more time. Tomorrow we only have FOMC member Wallace speaking, and then at Wednesday we have Powell speaking, but only once again giving the opening remarks like we had it last week. Then on Thursday we have Powell speaking again, but here he's actually holding a presentation and participating in a discussion where you really hear his opinion on certain things and not just a introduction at the Division of Research and Statistics Sentinel Conference in Washington, D.C. He's not going to drop a bomb on most recent Fed interest rate decision, yet we still see worse price action when Powell is speaking compared to when he's not speaking. But overall, very small news schedule, only Powell speaking basically and unemployment claims, but we get them every week. Other than that, yeah, nothing major here. We already had most of the major events. We had NFP and FOMC last week. And yeah, really just looking forward to the CPI news coming in next week. Treasury currency report, all that stuff. PPI news, that's all coming up next week. So today is this week is sort of like a little news pause. All right, I would be surprised if we don't continue lower eventually. Take a look at NQ. Still holding up relatively strong, but I think it should also start to break. ES is now at the midnight level, delivered from the breaker block. But my rules for the trade day account force me to have a fair value gap paired with it. Now we are already at the Asia equal lows from the high of the day. Even if we would have taken the breaker block entry at the low, or maybe the midpoint, I don't know. Let's assume we would have taken the breaker block entry at the low. Our stop loss would still have to be above this high, really, and that would be considered our protected high. We just cleared the Asia equal lows. It's not even a 1-to-1 risk to reward to account low of the day or the Asia session low. Of course, you don't have to place your stop loss up here yet. I don't know, according to the breaker block rules, that's what you would do. If you place your stop loss up here and we happen to get a wick to this candle's high and yet still continue into our anticipated direction, then yeah, you'd likely be chasing, FOMOing in. You feel like that loss was a mistake because really your stop loss should have been up here at the protected high. Makes more sense like that. But yeah, obviously risk reward ratio wise, not ideal. We can't always expect for price just to continue lower for a 2-to-1. Price would have to come down towards these lows right here. Friday's New York AM session lows. It's realistic, but like I said, we're looking for the fair value gap. If we don't get it, we don't engage, at least for the trade day account. To keep our consistency challenge up, the 66 days of consistency, see how that goes, what we can achieve with consistency, doing a little live example. Kept holding this bearish fair value gap, continued lower, but that's not even worth a little 4 points, 4.75, 5 points down here, yeah, towards the midnight level. Could have taken that 1 minute scalp, but yeah, I think that's done. NQ also continuing lower now, but ES is relatively speaking already much lower than that. So I'm only waiting with the hope of getting a potential long setup here before 11 a.m. We will see how that plays out. Let's first of all see if we have any questions on Discord. Yeah, same for me, Fresky. Agent Smith being in profit now on his YM shorts. Nice. Slowly DC8 in. Very well done. We've been short before the pump though. Just typically not what I like to do. Sort of, yeah, scaling in, dollar cost averaging into the trade. Like I said, trading is very individual. There are many different approaches. If you have the bias that we're gonna take out all these equal lows and you just stack positions at the high of the day, the further we go up, the more positions you add. You can do that, but that's not the approach that I'm gonna use for, yeah, this funded account challenge. So we took out the Asia equal lows. We also closed below that. We closed below the midnight on the 5-minute time frame here. We don't really have a 1-minute bearish value gap other than this one for a potential continuation lower into the Asia equal lows or the low of the day. I'm logged into the account right here, but I'm gonna log out of that. Go to the 100k static. I lost a little bit on that with the mistake earlier, but that's fine. Entertainment purpose. Did anyone take the breaker block entry like we outlined it here on the stream? I mean, we took the buy side. We have the SMT with NQ not having taken out Friday's high. Bearish breaker block right here from this bearish candle, lowest down closing candle before we made the high. Could have also argued this to be our breaker block, but really it doesn't make that much of a difference, to be really honest. Took out the Asia equal lows. The next target would be the current low of the day. Let's see what we do inside this bearish fair value gap. Here on a 1-minute time frame. If we continue lower to take the sell side, little scalp like this. Stop loss above this high. Targeting 4 points. But after taking all these equal lows, we could expect a higher retracement. We immediately ignore this bearish value gap right here, closing right at the high, using it as support. So scratch that idea. Yeah, NQ is pushing back up after taking out the 8:30 a.m. lows. So we still have the potential to maybe get a long at the low of the day. But therefore we need to put structure in place on the 5-minute. And so far, also during London, if we moved, we always moved efficiently on the 5-minute time frame, and by that I mean that we do not leave behind fair value gaps for us to enter on. We move up slow and steady, and always very tightly packed, like right here. Down, down, up, 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 big wicks, no fair value gaps unfortunately, and yet we continue to hit our target. We hit one of our targets and immediately displace here almost. But once again, for a market structure shift with this type of structure here on the 5-minute, we need to get above the breaker block, close above this level, leave behind a fair value gap ideally, and then continue further to the upside. Right now it's just more plausible that we maybe touch the breaker block once again and then continue from there into the low of the day. On the 1-minute time frame, we have a short-term high coming in inside the breaker block that we could clear and still reject off this overall 1-minute bearish fair value gap inside the 5-minute breaker, like this. But disregarding this 9:30 fake out move, fake out pump and dump to continue into the lows, really order flow has been bearish here on the 1-minute. Hindsight, of course, not claiming anything, just been looking for the model, didn't see it. So let's see if we take that 1-minute buy side. We have our 1-minute bearish fair value gap here. If we look at the 15, you think you can really trade this properly? On the 15, you wouldn't even see your market structure shift. You always like that bit of confluence with your trade from the higher time frame. On the 1 hour, also nothing really standing out. Take a look, go back to the DXY. DXY really moved above the London session high, and I think it took out the Asia session high. So let's take a look at our Euro US dollar asset, and the Euro US dollar took out the London session low, still yet did not take out the low of the day, all from our setup that we outlined during the London session live stream. Rather simple. Head back to ES, 5-minute time frame. Yeah, I don't think I'm gonna engage anymore today, unless we would be putting in nice structure, but I don't think today is the day for it. We have a very small range, even just from this high to this low, it's 15 points, it's something, but well, it's measured from the extremes. How often do you get the entry at the perfect high and you exit at the perfect low? Most of the time it's, I don't know, if that's the 50% level, you get in somewhere around the above 80% of this entire range. I'm referencing this. Most of the time you get your entry at 80% and your exit around 20% right here, and even then that would just be, yeah, barely just a 10-point move. Of course 10 points is enough, but regarding the breaker block entry, almost not even a 5-point move, really. So just because we had a 15-point range doesn't mean really it's realistic to catch, unless you have that inside information that we're gonna reverse on 4389.5. It's just a day that we sit out on. NQ is pushing up higher, same goes for ES. If we look at the 1-minute time frame, we already took out this high. Let's see if we respect that bearish value gap, or if we continue to go above this high after taking out the Asia, or these equal lows at Asia, taking out the London lows for sure. Just like we spoke about, close above the breaker and above this high would be our bullish market structure shift now. Not coming from the low of the day really here. But same thing goes like for the bearish market structure shift. We need that nice fair value gap with the displacement. If we close above all this and we get our fair value gap somewhere around this area, let's say Next candle retraces a little bit and we leave behind something like this. Maybe we will see. Now we're rejecting, I think, from that 1 minute bearish. Now we have equal highs. Oh, it's just really messy. How to do the tape reading here. Wait for this candle to close. Ideally, we would like a close up high for the potential bearish fair value, bullish fair value gap. Then we could frame a long into the previous day's high right up here at 4391. Maybe, we'll see. We're gonna stick around. We took out the SPY side and we ignored this bearish value gap, turning it into a inversion. Respected it right here at the low. Now we have equal highs, almost too clean to not take out. Could be setting up some sort of a left shoulder, head, right shoulder, inverted head and shoulder setup. This is just pure speculation. It didn't take out the low of the day yet, so we could also continue lower towards that and then take out these equal highs. I don't know, it just doesn't feel good enough to really risk capital on it. Compared to that, even though we had so many news last week, it was much easier to trade. See you tomorrow, Freshkey. I'm gonna stick around until 11 a.m. 10:25, so it's about to hit 10:30 with a new 15-minute candle. Yeah, no, I'm not even gonna engage on a static account. That has to mean something. EU is pulling back after the DXY took out the high of the day right here, the SPY side liquidity. Here on the 5-minute time frame and also on the higher time frames, the current high of the day since we've opened up right here on Sunday on this candle. High, low, we reverted from the low to the high with the market structure shift that we outlined during the London session. Right here, that's the market structure shift. We have our fair value gaps with the displacement leg, so that's where we would have entered. If you would trade the DXY, most of the time you just trade the inverse correlated assets like EU. And yeah, that's what we mentioned, looking for shorts on EU. Right up here, that's what my entry at least would have looked like. Bearish fair value gap. Stop loss, 1 tick above this high. We don't have to worry about spread and slippage with futures. Target a 2-to-1, which would come in perfectly with that 3 a.m. low. So 1 tick below that would have been hit nicely. And if you want to let it run, target a 3.25 risk to reward towards the Asia session low. Not bad, not bad. And yeah, we also had the confluence after taking out the previous day's high right here. We consolidate above that. We get our displacement, our protected high, our displacement fair value gap paired with the breaker block right here. We perfectly respected that breaker block. Not clean, just consolidating up here. But if you really look at price action at its core, we formed a high, a higher low, and a higher high. We confirmed the market structure shift with a candle closing below our most recent higher low. That's a bearish market structure shift. Leaving behind our bearish fair value gap right here. So if we only look at this price action up until all the chop that we saw, we can't control any of the stuff that's happening past our entry. We had our buy side liquidity, short-term high taken here. After taking out the previous day's high, let's make this a red line displacement. So we look for the lowest down closing candle between our most recent higher highs, which would be this one right here. This one is a doji, so we could include it. It's neither bullish nor bearish. And because we have consecutive down closing candles, in reality, this would be our breaker block if you only look at bodies. That's what the bodies look like, but that's very based on the trader and their preferences. For me, it's always the wicks with breaker blocks. So we label this as our breaker block right here. Skip a few more candles ahead. We see the low is likely in. We already tapped the bearish value gap, so we could measure first of all our standard deviations as targets to the downside and our retracement of this price leg right here. Here's the 50%, the golden pocket, and the 80% retracement. So getting an entry around this bearish value gap right here should really be fine. It's around the 50% of the breaker block as well. Stop loss. We do not try to force a stop loss above this candle's high. We do not expect price to be so super precise that it's just gonna reprice into this fair value gap without trying to even wick above it. That's why we always choose the protected high, give it one tick so we don't get stopped out with equal highs. So best sell side liquidity to target, in my opinion, would be the 3 a.m. lows right here. That's already more than a 2-to-1 risk reward. So I would close most of my position at these lows and let like 25% run towards these equal lows, and also the Asia sell side liquidity Sunday 8 p.m. And if we skip that ahead, got close to our stop loss, but that's why we put it exactly at the protected high. And yeah, eventually already have hit our 2-to-1 risk reward. And yeah, that's basically how it's done. Works better with the DXY and the analysis, especially if you see DXY shifting structure, you see EU shifting structure, you get the setup at the low of the day after taking out Friday's low or Friday's high on EU, and yeah, you're done. With ES, we didn't really see that much of a clean price action today. We even took out this high. It's just a little bit more volatile. Here on NQ, same story. Tell me how you want to trade this on a 5-minute time frame. So yeah, pretty nice setup on EU. We spoke about that during London. One standard deviation target would have been hit. 2 standard deviations would be below the Asia low. Yeah, like I said, stop at break even. Let 25% of the position run to the final target, and yeah, close the rest of the position right there. Clear a higher time frame point of interest. Done. Shift structure, displacement, done. Breaker block, bearish fair value gap, done. Entry, stop loss above the protected high. Wait for your targets to be hit. That's exactly what we're doing on ES and NQ. We always keep a track of the Euro US dollar chart as well, also for the DXY during our London and New York session live streams. But for the trade day funded account, with a $2,000 end of day trailing drawdown, it doesn't really make sense to trade 10 different assets. I don't know, with a rule-based strategy. I'd be more of a fan of setting up 2 or 3 trade day accounts and use one for NQ, one for ES, and one for EU, Euro US dollar. But yeah, right now I'm focusing on ES. Has been treating me very well. If we don't get the setup, we simply don't engage. Go back to the 1 minute here. And what were we still forming and holding? The earlier outlined inverse head and shoulder setup. Retrace into the fair value gap right here. Take out the equal highs, which basically would be our neckline of this head and shoulder setup. To take out buy side and maybe even the previous day's high, previous week's high of Friday. Yet something I wouldn't engage on. Alright guys, do you have any more questions on Discord or also on YouTube? Feel free to ask. Otherwise I will end the stream here in case we get a entry which I think is less than likely. Like I don't know. We only have 30 minutes left. Also for our entry to form. Might get something during the PM session, but I won't be trading for more than, we had 3 hours during London, 3 hours during New York. Yeah, more than 8 hours per day. It's really beating the purpose of, yeah, trying to quit your 9 to 5, and then you end up sitting in front of your charts for 12 hours per day. Well, at least you're working for yourself, but still. I hope you get the point there. So, yeah, I don't think we get the setup with the entry during the AM session. So we leave it at a little loss during London based on this market structure shift right here. Didn't get the fair value gap entry because simply there wasn't a fair value gap. I won't be using implied fair value gaps or any of that stuff where you disregard the wicks or simply just breaker block entries. Depends on the setup, but today just wasn't a day for it during New York. We will be back tomorrow again and see how we go tomorrow with the FOMC member speaking. We had a nice setup on EU that we outlined during London livestream. And Q also, yeah, I mean, if you manage to make profit here, good on you. I don't even want to make profit on that chart, to be honest. Yes, didn't provide the bearish value gap for entry here on the 5 minute, and looking at the 15 gives me a headache just looking at it. Comparing the price action that we saw last week, 15 minute, market structure shift. That's not the 15 minute. Entry right here. But we expand, much easier to spot a trend and enter on a pullback of the trend. Right here, Asia session low. At least we move. I hope that's really clear. And on the weekly outlook, we also spoke about, well, I'm not going to say that here, just watch the weekly outlook, members. What we can expect after such a bullish week based on, yeah, what we saw previously. That's why we're going to go low risk into this week, especially on Monday without news. With a relatively small daily range measuring from the low to the high, yeah, 15 points. If your stop loss is already, let's say, 10 points or more than 5 points, a 2 to 1, yeah, really be expanding the range while we could do some sort of seek and destroy, take out the high, take out the low, and go back towards our Friday's high, previous week's high. We'll just wait and see how we do on bias on big time frame. Bullish with the tendency or the possibility of a pullback. So I will simply act to what I see on the lower time frames, having this bias in mind. If I see the potential reversal after taking out Friday's high, like we for example did on NQ here, to continue back into last week's range. I don't know, waiting for the high of the week being maybe put in place. Yeah, so medium-term bias would be bearish for a pullback. Could be wrong, and we could simply continue up higher before we get that pullback, maybe forming the high of the week on Tuesday, Wednesday, like we most of the time do. So yeah, just playing it slow today on Monday. Really not willing to move much. So long time frame, bullish, personal opinion. Short term, retracement into this huge inefficiency that we have left behind, or these inefficiencies we left behind. And most of the time after big expansions to the downside or upside, what do we get? Consolidation. Big move to the upside. Chop, chop, chop. Not always, but most of the time. So yeah, we will simply see how it goes. 5-minute time frame on NQ. Now pushing back to the upside. ES, 5-minute time frame before we end it here. We still have the potential inversion head and shoulder setup that I mentioned right here. Took out these equal lows. Didn't bother about going to the low of the day right here. Yeah, we will see. That's all guesswork. We wait for a model. If we see it, we execute, like last week or the week before. Very successful with that. This week I decided to start a little series of how important and easy it is to stick to your plan, be consistent. Maybe that's what some of the traders out there need, especially when trading ICT concepts. Because, I don't know, it happened to me. I thought it was really misleading. Subconsciously, I believe that knowing ICT concepts and price action, I know what the market is going to do 100% of the time. And that's simply not true. You can always be wrong. And yeah, even if I had a losing trade, then you get into the habit, or not habit, but into the pattern of, okay, I just lost out on this short. Now we have this here, right here. Okay, with ICT concepts, entry long, this buy side liquidity, we took this, so it has to go into this direction now. You don't, stick to your model. You skip the model. You try to make back the loss you've made. Enter on a lower probability setup. And yeah, that's simply that. You make more drawdown, or maybe if you're lucky, you don't want to really rely on luck. If you, not follow the model or your trading plan. If you do scalping, you should be fine. But yeah, overall, I hope you get the point that I'm trying to make here. With ICT concepts, you anticipate what the price is doing 100% of the time. We don't have to know what price is doing 100% of the time. We wait for price to set up what we're looking for. If we see that, we execute on that. We let it play out. And if it's losing, it's losing. If it's winning, it's winning. We play the probabilities just like with any other strategy. There's no reason why ICT concepts are super superior above, like, I don't know, simple support and resistance concepts, or I don't know, any other indicator-based strategy. The only difference is that indicator-based strategies are always, most of the time at least, based on what price has already done. So if you look at EMAs and all that stuff, they always change once price has made the movement. Like they cross over once price has already expanded to the upside. So waiting for the EMAs to cross over will always lag behind price action. So that's the only upside to ICT concepts. But yeah, really that's the whole point I'm trying to make here. Being consistent for 66 days, just started a 50k challenge, see how it goes. We do the streams here live daily on YouTube for free. If you want to join the London sessions, there's a link in the video description where you can get access to my VIP membership, get my trade ideas and setups, access to the ICT all-in-one indicator and much more, and also access to, like we said, the London session live streams, executing the simple strategy, sticking to the plan. Sounds simple. If you've been trading for a while, you might be aware that it's actually not that simple. Simply sticking to your rules. All it needs is one day not sticking to the rules, and your account is blown, or you at least made so much damage that you're almost back at break even, and you're wondering like, oh, took so much effort to get the account in profit, and now I gave it all away in one single trading day. We've all been there, so that's why we're doing this 66-day series, trying to see what we can achieve within basically 2 or 2.5 months of sticking to our rules, creating a habit. Perfect. That inversion head and shoulder setup played out perfectly. If you want, you can use this as a market structure shift paired with the bearish share value gap. for the continuation of higher into these equal highs. And now you might see the correlation between the 2022 model here. I would have taken that if it wouldn't have been, yeah, if you would have taken that low of the day right here, maybe with a wick. If I would have done that, I likely would have engaged on my static account, my scalping account. But yeah, just want you to notice how similar the head and shoulders or the inverted head and shoulders setup is really to the 2022 model, just with a little bit of more rules behind it. You wait for the market structure shift, the displacement, the fair value gap to enter on, while with the head and shoulder setup or the inverted head and shoulder setup, you most often use a Fibonacci retracement tool and enter on the 50%. Not saying anything against it, that ICT didn't invent the 2022 model. He did. He gave the rules. He shared them for free. But basically, in my opinion, and I'm allowed to state that, it's the inversion or regular head and shoulder setup. Nothing newly invented. All right, guys. I think that's gonna wrap up today's stream. I don't think we have any more questions. Let me check the Discord. No, that's gonna be it for today. Really not the best price action, especially on the 5 minute. Well, that would be interesting. So now we took out these equal highs, which would be a valid market structure shift here on the 5 minute structure shift bullish. We have a bullish fair value gap paired with it. We have a order block down here. The down closing candle, I would refer to it as the order block. Let's make this green. Bullish fair value gap right here. Market structure shift, we closed above. So the highest up closing candle right here would become our breaker block. We took sell side, we have buy side above. So let's say we were to enter right here with a stop loss all the way down here, targeting a 1-to-1 risk to reward ratio. That's what it would look like. I wouldn't really go for a 2-to-1. Previous day, previous week's high would be my final target. But we can already see that we kind of disregard all the structure here on the 5 minute time frame already. The 15 minute time frame is still chopping, nothing clean at all here. So we might still hold the breaker block or the order block, or we just took some buy side after hitting these Asia equal lows to continue lower into the low of the day. Wouldn't be worth the entry for me. It's not a valid model according to my rules. I would have liked to see the low of the day to be taken, the Asia sell side liquidity pool, right here at 8 a.m. or 8 p.m. New York local time. But otherwise, that's basically what the entry would look like. Targeting buy side, if that's something you would like to take. It's the 2022 model. We took some sell side, but not higher time frame sell side, higher time frame. Yeah, but really, by just going to the 1 hour time frame, regarding this as major sell side, I don't know if that really works. You would really look at the low of the day, also on the 4 hour time frame. Wouldn't even see these equal lows. So I wouldn't really call this as a, or label this as a higher time frame point of interest. Therefore, we would have needed to take out the low of the day. Let's take a last look at NASDAQ. Rejected off our daily bearish volume imbalance. Also disregarding our bullish fair value gap right here. We have the order block. We took out some sell side, but also not external or higher time frame sell side liquidity. But yeah, if you think it's worth the risk and you like the entry, you can get in at a low price. Maybe we just retest the order block before we continue up higher. You could take that entry around this order block, targeting a 1-to-1 risk to reward, or at least a buy side liquidity or Friday's high, coming in right here at 4,390 roughly. Can take that, but that's not financial advice. This is just based on what I see here on a 5 minute time frame. we took equal lows, we formed a lower low, lower high, lower low, higher high, higher low, higher